morning, JW, and good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at financial results of two, I would like to think, very iconic brands, one in the area of regional banking and financial services, and one in terms of international beverages and spirits. We're talking about RFHL, Republic Financial Holdings, as well as Angostura Holdings Limited. Now, both companies or groups would have fared somewhat differently in terms of their most recently released results. Let's take a look at how both groups would have performed and what investors might expect in the coming months ahead. Turning firstly to RFHL for their fiscal 6 months or half-year period 2023 ended March 2023, the group would have reported an increase in earnings per share of $4.81, a 7.8% increase from that $4.46 recorded in the prior comparable period. Driving this improvement in performance was a 12.5% increase in net interest income to $2.25 billion from just over $2 billion in the prior comparable period. Overall operating income up around 11.6% to $3.33 billion from just under the $3 billion mark in the prior comparable period. Net profit attributable to equity holders ultimately 8% higher at $786.8 million compared to $728.7 million in that prior comparable period. So certainly making for good reading for investors in RFHL. When we take a look at that, those operating income by those segments, we can see that net interest income in that blue segment again remains the largest contributor to overall operating income, and that did increase, as mentioned, at 12.5% odd. Other income also improved just under 10% from $980 million to almost $1.08 billion. So certainly again revenue trending in the right direction, despite somewhat of a blip in that COVID-affected fiscal half-year 2021 period, as we can see, but certainly strong recovery there by RFHL's operating income over the past few comparable periods. When we take a look at profit before tax, well, the geographical diversification strategy employed or deployed by RFHL has been paying dividends, for want of a better expression. We can see that despite an 11% odd decline in profit before taxes from its traditionally largest segment, Trinidad and Tobago, from 561 to just under $499 million in PBT, some of its other segments regional segments rather, have stepped up and increased in performance, most notably Cayman Islands, which swung from a profit of $95.6 million in the prior comparable period, up 160% to $250 million in PBT. So certainly a meaningful change there. The Guyana segment also increased to $137.6 million from just about $100 million, a 57% increase for that particular region. And the Eastern Caribbean also increased just around 45% to just under $186 million from a $127.8 odd million in the prior comparable period. So again, despite some weakness in its major geographical segment of Trinidad and Tobago, some of its other segments, which RFHL has invested into, continue to grow meaningfully and contribute to overall increase in earnings for investors. And with that increase, we can see that on a trailing 12-month basis, earnings per share for RFHL has increased or improved to $9.68, which at its current price has brought its price earnings ratio down to just under 14 times, which is an increase in relative value for potential new investors and existing investors who may want to be adding to their portfolio of RFHL shares. So at a price of $134, again, RFHL is trading at that price earnings ratio of about 13.8 times, broadly in line with the banking sector average of 13.5 times, and does offer a relatively attractive dividend yield for the banking sector of 3.4% relative to that sector average of 3%. So with that geographical diversification in mind, those relatively fair valuations and relatively attractive dividends, Bourse is going to maintain a market weighting on RFHL for the time being. Turning very quickly to Angostura Holdings Limited, not such good reading for AHL investors. Earnings per share declined from 14 cents in the prior comparable period to just about 10 cents in the most recently concluded financial period ended March 2023, a 28% decline. Revenues holding relatively stable or marginally lower, in fact 1% lower from 199.4 to 197.4, which would have surprised some observers given the recently concluded carnival period. Gross profits, however, did increase 3.3% from $102 million to just about $105.5 million. Ultimately, with some increased advertising spend, profit for the period did decline from 27.8 to just about 21.2 million over the comparable periods at 23 odd or 24% odd decline there. When we take a look at Angostura's revenue trends, this is perhaps the most surprising result in the most recently concluded period, given that the seasonal effects of a resurgent carnival period in the first quarter was expected by many to materially improve revenue growth for Angostura in the most recently concluded period. However, we saw that there was a 1% decline in revenues. Now, the good news is going forward that gross profit margins have improved and continue to improve at 53.4%, which does suggest some abatement in the cost of input of material inputs and a reducing cost of goods sold, which is certainly a positive indicator for subsequent periods. Operating margins and profit after tax margins, however, did decline again on the basis of some upfront marketing and advertising spend, which is not necessarily expected to recur in future periods. So somewhat of a cautiously optimistic outlook for AHL in subsequent periods. However, on the basis of lower revenues currently and those lower margins combined with elevated valuations and at its trading price of $23.50, Angostura is trading at a price earnings ratio of 35.1 times, which is fairly high on an absolute basis, but also relative to the sector, with a below sector average dividend yield of 1.5% versus the sector's 3%. Bourse is going to maintain an underweight rating on AHL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse, email us at invest@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, for all of our research, which is absolutely free. And of course, catch us in today's edition of the Trinidad and Tobago Guardian newspaper. Well, that's it for this week. Stay safe, keep investing, and stay profitable. And we'll see you next time on the Bourse Report.